Google did not. They did not come through. They did not come through, as well as AMD. Now, we'll talk about each of these and why. I want to always give some education around why this may have happened. And continuously, as I've been kind of saying on this particular channel, around a lot of AI investment spending with these top tech companies in the US, continuously spending more and more and more and more with this AI race. And I'll ask you down below, let me know what you think. Are we headed towards an AI bubble where there's just so much spending going on that the actual race to AI and the end all be all of how it's supposed to perform and continuously trying to impress investors and shareholders, stakeholders, like, how is this panning out? Let me know down in the comments what you think. But without further ado, let's jump into today's video. What's going on, everybody? My name is Dr. B. I'm a holistic life and business coach and strategist for entrepreneurs and thought leaders. Been an entrepreneur for the past 8 years full time. Former pharmacist, undergrad in chemistry, matriculated my way up primarily in the coaching and consulting space. So if you see that teacher in me or that educator, if this is your first time and you like the way that I explain things, please tap in, and I would love to have you as a part of this YouTube family. And if you want to tap further in, we do have a Discord called Leverage University. It has been running for the last 5 years, from coaching, teaching entrepreneurs, thought leaders, how to develop online businesses, how to speak and communicate properly, all those good things. And then specifically within the financial space, we have credit as well as this trading aspect. So if you want to be a holistic, well-rounded thought leader and you want this trading aspect to be a part of that, we'd love to have you inside the community. So tap down below for our Discord. Now let's jump into the value today. Alphabet, Google, you see the face. You see the face. So we'll talk about it here, and I'll jump on the charts as well so you can see how this may have already been quote unquote predicted and a concern as Google was pushing up into earnings. So Google shares fell more than 9% in after hours trading Tuesday after a company reported fourth quarter results that missed on revenue expectation and announced more artificial intelligence investments. So for my long-term Google shareholders, a lot of us, we've had Google shares for a while, so we don't mind this pullback, right? For anyone that has been recently investing, more specifically in 2023, potentially, I would say more so 2024. If you got Google around the 160, 170 mark on that dip, great, you're still in the green. But if you start buying Google above 200 and you're expecting it to push to 210, 220, it'll eventually get back to those points. But now we're back underneath $200, which is a little bit concerning. And let's talk about it on the charts in just a second. Okay. So all this roundabout, I like to speak to beginner, intermediate, advanced investors. So for my advanced investors, let me know what you think down below. But for the simplicity's sake of this public platform here, essentially what this is they're constantly, with a lot of tech companies, just like any big wig, just like NVIDIA, and people wonder, how is NVIDIA tank on earnings if they beat? How did Microsoft tank on earnings if they beat? I don't understand. And in this case, actually, they missed on revenue for their expectations for Google. So it wasn't a double beat and a tank. It was actually warranted in this case, which is why it was so drastic. So they're spending more for AI, right? Which every tech company is, or really any company that's trying to advance into the new age. But they're also not performing on maybe the Google ad revenue. If you can see here, YouTube ad revenue slightly up on there, so that's good. 9.6, so slightly down on Google Cloud revenue right there. And then acquisition cost slightly down as well there. Revenue 9.6.47, so that had to primarily do with Google Cloud revenue. So we shall see. Let's see if some other things here in this article. The company also announced their plans to invest $75 billion in capital expenditures in 2025 as it continues to expand on its AI strategy. That is above the $58.84 billion that Wall Street expected. So if I'm an investor or shareholder, or in this case, if Wall Street, i.e. hedge funds, big money, if they are expecting you to come in with lower costs to develop more, very similar to the DeepSeek, right? If China's saying, hey, we have AI advancement, we have chips, we have all these things that can get to the same result cheaper, then you're having a company say, hey, we're going to spend 25% more than what we said we were going to spend, and our revenue, our cloud revenue is going down, quote unquote, right? So you see the concern generally. I'm just speaking on a very generalized level. Okay. Alphabet said it expects capital expenditures for the first quarter come in between 16 billion, 18 billion, which was also higher than 14.3 billion. Google's capital expenditure for the quarter was 14 billion, which is higher than 13.26 billion Wall Street was expecting. So still their costs are increasing, which, as we can tell, PPI, right, producer price indexes, right, every company is having to spend more because of the cost of goods, and especially with these tariffs on the rise with President Trump. That is also a concern, or just warranted, that, hey, what's going on here? Because if you're going to have to spend more, and it may even potentially cost you more if you're doing international trade, you're going to have to swoon us a little and sway us a little bit more, right? So I don't want to belabor the point here, but just in summary, from a positive standpoint, we know that Google, for whoever you are, you may think Google is more of a grandpa or a grandmother, or I don't know what you want to say. They're just old school. It's Google. Okay. So I don't bet or want to bet against any tech company, but it is concerned that any company can, take a dip or take a back seat for a second. So this, in my opinion, I'm still buying dips. Let's keep it simple. This gives another opportunity for you to get a solid tech company, Mag 7, on a dip. Okay. So there's Google. Let's jump into AMD. Okay. Before we do that, let's keep on the same train here, so we're not jumping around. I want to go to the chart of Google. All right. And if we look at the chart on Google before their earnings drop, okay, Google had a really nice chart forming here, and it still does, right? It broke above these highs of 190 or 191, if you want to be a little bit more specific. 190, that was a good level right there. This area, we broke above, and we started turning this area into support around 190, 191. It started to hold this as support and started to continue higher. We got above 196, 195, and then 200. And then we started to push into earnings. So as you can see, a lot of investors were buying Google up, or this could have been, it could have been warranted as a trap, right? Where retail investors were maybe getting, a little excited that Google was coming into the AI race and they were doing well. The chart looked good. They were buying it up here, buying up more. Expectations were going to blow it out of the water. Google was going to be all the way up at 220 plus, very similar to Amazon. Okay. And we got slammed back down. Now, from a chart perspective, I'm primarily a technical investor. Anytime I see a company, now this is just me personally, anytime I see a company pushing severely up into earnings, it kind of makes me a little bit more weary. Now, some of you may be like, well, Brian, that doesn't make any sense. If it's pushing up into earnings, isn't that a good sign? Yes, but it's in uncharted territory, coming into an expectation. And it's like coming into where, it's too easy of money, right? If you're pushing up. Now, Palantir was a different story. Okay. Palantir is a different beast. People are calling the new NVIDIA. Palantir is a different beast, that it just keeps pushing new highs, just keeps blowing it out of the water. However, if the AI investments for Google and a lot of the tech companies are continuously having to beat and expectations tenfold, it gets a little concerning. Okay. So when I saw all these gaps below, right, there's a gap below right there. I think there was another gap, okay, in Google as well. So there were a couple of gaps here. There's a gap, there's a gap, there's a gap. So you have 3 gap ups, 1, 2, 3 gap ups leading into earnings. So go watch my earnings video again about how to trade earnings. And I give some little kind of hints of how you could potentially look at some of the earnings and maybe kind of, quote unquote, have a prediction, right? Because no one knows. But once I start seeing patterns where it's moving up into earnings continuously, I get a little bit, if it's pushing down into earnings and it's a solid company, right, I kind of get a little bit more excited because people are a little bit more fearful, and then it pops at a support level, earnings comes out, and it goes. Okay, that's just my kind of due diligence as I'm taking notes on earnings more and more. Okay, so you saw this multiple gap up. Gaps need to get filled. They want to drive the price back down. Great. You made your money leading up into earnings, drive the price right back down. told my community inside leverage this was a possibility to fill those gaps, and it definitely did that if we turn on after hours right here, as Google went all the way back down to 187 at the low, and now it's holding up right at support, as you see. So they drove it right back down to where buyers want to buy. Buyers, 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 buyers. So what do we need to see from Google? We need to see personally tomorrow if this was a fluke and that people buy it up, or is it a little bit more concerning and we see some selling pressure continue once it retraces back maybe to 196 and then 193. So I want to see this kind of candle, which I'm pretty sure Google will get bought up pretty aggressively in the short term. However, still got to watch for the continuation, maybe down below. Okay, so I'll be kind of sitting patiently, but it is Google. Buy at the dip, trade it very quickly if you like, but just be mindful of direction following earnings that it could continue. Very similar to Microsoft. If you see here, see Microsoft drop down after earnings, right? And then popped right there, and then continue down further over the following days, right? So you might see a little quick pop, but it might be warranted that it will continue down further. All right. So please be mindful if you are trading Google more specifically. If you want to pick up more shares, do whatever you do. Cool. It's on discount. All right. Here's Google. AMD. AMD reported better than expected revenue and profit on Tuesday. Data center sales nearly doubled in 2024, but still fell short of estimates. So AMD, right, wasn't that bad of a report, right? Better than expected revenue and profit. So that is a good thing for investors, but their misses on data center revenue. Okay. The stock fell in extended trading. It's a double beat with a little bit of, soft guidance potentially on their data centers. So why I say, folks, that trade earnings before, you don't know, no one knows. And the best kind of gold standard strategy is to trade or invest after earnings, ideally. If you already hold shares, then you have no problem with the dip because you get to pick up more. But if you're trading options or putting lotto contracts in and you think it's just going to beat and beat and beat and beat, and it beats and then it drops, then you're underwater. Okay. Which is why you see people on these platforms tell people to wait to trade after earnings. Okay. Go watch my earnings video on how to trade earnings. Okay. Now let's look at AMD's chart. And AMD personally, I'll go to my Discord here and share with you really quick what I put as an AMD underneath our shares. Okay, so here's our Discord. I'm going to shrink some of these. Looks like a lot, but we have our community, Thought Leader Hub, right? Our club rooms with all kind of different chats here, right? Where we're just hanging out, talking about different stuff. My master classes and boot camps, our university with all my trainings. And then we have our crypto section here and our trading floor with all the information. Okay, so if I come down to our trading floor and go to shares and leaps, I've organized into different chats. Here is AMD. So this whole time I signaled here that I'm looking for AMD to push back down into ideally this 105 area. If you see, I use a Fibonacci retracement here. This was back at the end of last year. I was looking at AMD making a nice run in 2025 into 2026. So I was looking for more of this 110 and then 105 and 100 area. All right. So it's in my zone, but I wanted to be a little bit more cautious. Okay. Thinking 6 months to a year out, AMDL shares, right? And then the final thing I said before earnings right here today, hopefully everyone is positioned in their shares and leaps. Could get one more add if we fall lower with earnings. This was this morning. Okay. So this was before, not after. So, but this level down here is a good risk to reward. So I actually wanted it to fall. And then I told my community, there we go. Another chance closer to the 100 level. Okay. Love it here. Personally, I think this is the big buy up opportunity right here. Okay. And here is the reasoning why. All right. You can believe whatever you believe. You can think that AMD is done and all this kind of stuff, but it's when things are sleeping, in my opinion, that folks begin a little fearful, step away, okay, whatever. But it is right into this good risk to reward zone of 105 and even down into 100 if it ticks lower, okay? So I love this on AMD. Here it is again after hours, tick down to 105, close enough. Remember, they did have a technical double beat. Okay. So you already see buyers stepping up after hours here, and AMD could have a quick recovery in the morning. Hopefully, it actually stays down here in the morning. It's going to be severely oversold on the RSI. Okay. Relative strength index. Go watch my indicator video if you want to learn about some indicators, right? But here it is, oversold, and it is going to be severely oversold in the morning on a daily and even a weekly time frame. Great buy zone, great buy opportunity. AMD or AMDL. Okay. Shares. Cool. All right. I'll give some quick levels on SPY, QQQ, and then I'll be out of here. Thank y'all so much for tapping in. We got some more educational videos coming through. So make sure you subscribe, turn those notifications, and make sure you share this video out with anybody. Hit that like button. Send me a comment down where you're from. And also, if you're inside of Leverage University, if you message my my DMs on Instagram, drmcelderry, right? I may have a little small discount code for you if you want to type it in right now. Feb10 get you 10% off. Feb10 on university section from our Discord. So Feb10, FEB as in boy 10 at checkout. All right. So 521 is going to be a key support. As you can see, a lot of buyers sitting at 521 and 520. So I suspect on QQQ that if Google recovers, we could consolidate and push back up. Remember, we still have Amazon earnings on deck. So Amazon could save the day. Who knows? Microsoft also consolidating at support. Apple was very strong today as well. So not betting against tech. We are in fear. Remember, I always check that fear and greed index. All right, there we are in fear still. So the dip could get bought up very quickly and we could run back up to highs. All right, so QQQ, as you can see here on the charts, okay, it is consolidating right here, still forming higher lows, hasn't really broken, it's still lower highs, right, but higher lows right there. And it could start breaking out of this and heading back towards 530, 533, okay? So you would need these failures back below 518 and then back down to 510, all right? So you need these to take out these lows of 518 and ultimately about 517 for those failures to kind of come in and we start coming back down like this, okay? That's how that would look. Otherwise, we could break up out of this channel like that. So watch for a break of 527, ideally maybe 528, but break of 527, you start to look for that trend to change, break of previous day highs, 527, take it up to about 530, see how we react there, and then ultimately back up these highs at 533, we could squeeze, right? SPY, previous highs, I would look at 606, 605 right here in this channel, as you can see for SPY, okay? We're in this big channel. It could push back up. You would look for tomorrow a break of 603. Break of 603 could push up into 605 and then ultimately 607. All right. If we break 607, then we're headed back to 610, 611. But ultimately, got this resistance here right underneath 603. If we do push up in the mornings with Google, nice recovery. If we continue to stay weak, we could push back down into this 596. Right? If we break 596, we're coming all the way back down into the 590s and 589s. All right. So we're kind of in the middle of a range here. Right. And remember, this is a scalpers and day traders market. Okay. So a lot of you that are long-term investors or a lot of you that haven't traded a Trump market, I personally have in 2017 and through 2019. So if you've not seen this type of market with tariffs in place, very similar to 2018, right? It's going to be very volatile back and forth. So if you are holding positions too long, or if you are stepping away from your computer and you don't have time on your contracts, or if you buy shares and then at the end of the day, the shares are down or up or whatever, right? It's very, very volatile because at any moment, if you've noticed when Trump speaks or tweets, right, the market's moving. Okay, so you need to be mindful to have your stop losses. If you don't know how to set stop losses, we'll create a video on here or join Leverage University, as well as learning how to trade, not when you're ready, right? Not when you think that, oh, now it's time to trade, right? Get a part of a group. If it's not our group inside of Leverage, if it's another group, you're not going to learn this skill set, in my opinion, in this type of market, simply watching YouTube videos. You've got to get involved and get active, whether you're watching someone trade or you are seeing and trading with them under a simulated account, right? A paper trading account, right? You've got to get in the game, because you're not going to understand what we're talking about sometimes all out of love until you get in the game. Okay. Right. It's great and watch when this is still, but what happens when it's moving? Right. What happens when it's moving? Just because you see a green candle does not mean it's going up forever. Just because you see a red candle does not mean things are bad. It's almost the psychology of the opposite, right? So just throwing that out there for everybody. Peace, love, and blessings to you. Thank y'all so much for tapping in as always. Make sure you hit that like, subscribe button, turn on those notifications. I'll see you on Sundays for our Stock Sermon Sundays. I'll see you on Thursdays for our Thought Leader Thursdays, developing you as a man, as a woman, from a mental, physical, spiritual standpoint, updating you on some current news. You get to see a little bit of a lax version of myself, and let me know what you would like out of this channel. Peace, love, and blessings. Talk to y'all later. Bye-bye.